Yeah, it's fine, Nico. You have any questions for me? We can use this as a one-on-one as well, no problem. No questions, okay. Let's start with we'll start with NAS and then we'll move on to Bitcoin and the others, right? So last week I mentioned before market close that I'm treating this CPI as was a wave 1 here. So CPI was a wave 1, the retracement was a wave 2, we had a wave 3 here. I was actually looking for a wave 4 to come here and then the wave 5 to cap off here. But what actually happened on, just give me a second, so check this is recording. Yeah, it is. What actually happened on market open this morning was it gapped up. So we had a gap here. And all of this looking for an impulse or a move up of some sort was based on the fact that I wanted to see this as some sort of 3-5 extended flat, right? So looking for the 5 waves, and if we look at the fibs really quickly, if we take at the bottom of CPI, the spike up was wave 1, the retracement was wave 2. You can see it hit the 1.618 extension, so that's okay for the wave 3, which means that wherever wave 4 ended, we want to see wave 5 equal to wave 1, right? So we don't want to see any double extensions, and I've drawn a line here, and I'll show you what this line is, and I say double extension above there. So basically, if this was wave 3 over here, and we gapped up, wave 4 actually turned out to be more sideways and upward trending here like this, right? So that makes it a bullish correction. Even though I wanted to see wave 4 come down to somewhere here into this order block and then pop up for wave 5, the fact that wave 4 was upward trending and maybe some sort of flat or looks like a triangle A, B, C, D, E, that means wave 4 ended here. So if we took a 2-4 trend line on that wave 4 that I say it is, let's just get this. Give me a second. Just give me a second. 1 second. I'll call you back now. Right. So if we put it to the end of where we think wave 4 is, that means wave 5, we'll set the target for it now. Price shouldn't break this 2-4 trend line unless this impulse is complete. Now, wave 5 target, if that was wave 4 that ended there, was a simple length of wave 1 projected from wave 4. 100% extension gives us 11,291.30. So that's where I would like to see wave 5 come to. Anything above 1618 over here would be considered a double extension. That means 2 extended waves and an impulse. I don't want to see that if this is a 5-wave move. So I'm wrong about the 5-wave count above there. It's something more. So anything between here and before the double extension I'll take, but the lowest hanging fruit obviously 100% extension of wave 1, and I'll TP in about $30 time. Let me show you where I entered and why. So I entered in here. Basically what happened is this, we treated this as the wave 4, price came up here, and I looked at this as being fair value for buying. That little FEG there, if you go down on a 1 minute, you'll find that there, this little FEG here as fair value for buying. Let me get rid of this. Right, so this is where I bought based on the fact that if this is a wave 5, then we want to see price go higher. It shouldn't go below the 4, and then this is starting to look like a wave 1 of wave 5. So wave 1, 2, and then 1, 2, right? So if that's a 1, 2, then technically it shouldn't go below here either. So I bought in this FEG here, targeting 11,291. Price is approaching there. And what we're starting to see here now is a 1, 2, then a 1, 2, 3, 4, and we're coming into a 5. So this would give us wave 1 of wave 5, wave 2 of wave 5, wave 3 in here of wave 5. We'll get a retracement probably into this FEG or the previous wave 4. So down here, and then finally up for the wave 5. So that's what we want to see, or what I want to see for this count. So my stops are at break even at the moment, because technically if this is a wave 3 coming in here, we don't expect it to come all the way back down here, and if it breaks this trend line, then we're wrong anyway. Right, so I'll look to TP just now. It may retrace back, like I said, to a wave 4 of a smaller degree in here to give us the bigger wave 4 and then pop up for the wave 5. So what that would overall give us is something that looks like accumulation, a failure swing, an open liquidity run to finish the major wave 5. Then we'll look for displacement and finally move down. So that's my plan for now. If this turns out to be something more than that, then this won't be a 5-wave move. This will be something more corrective. And then we'll look at this being some sort of neutral triangle where this was an A wave, this was a B, and then this is the C, which is a corrective, probably A, B, C, X, A, B, C, right? And then extension for that would be obviously capped at 1618 as well. We don't want to see the C of a neutral triangle go higher than that, so that means we'll take the length from the bottom here to the top here as the A wave, down here to the B wave, and then 1618 extension puts us here. So we don't want to see price go above 11,368.70. Ideally, this is where right now the 1.382 and the 1.484 is where a C wave of a neutral triangle ends, right? So if this was A, this was B, this is C, then we look for the D. Because the B is deep, the C may be shallow, or the D may overtake the B, in which case we will be dealing with still a neutral triangle, but we will be dealing with this, right? Accumulation, failure swing, open liquidity run, the push that takes the lows, the retrace that comes here, and then continuation further down. So all depending on what happens here, how far we get up. I want to see it start to taper off here now, and I think it's coming to my TP. I don't know whether I want to hold. Maybe I'll TP here on the, because it is coming, it's $10 away from my TP. So maybe I'm going to TP here, look for this retrace, then bang it up one more time there, because that is probably another $100 in there, right? So if it hits the target here or gets close to it, I mean, $10 is neither here or there. In fact, I might as well just TP now, and we'll take it from there. Just give me a second. Let me close this trade. Close. Done. Right. Now that we've closed, can't join stream. Ace Trader. Not too sure why you can't join the stream. Just close your Discord and maybe try again. Right, so if this is more corrective, then the fifth, this should all, instead of being a wave 5, this should be an A. We'd see a bigger B come down here, and then we'd see the C go up here like this, right? If this is not a fifth wave and this is the corrective A, B, C for a W, this is all an X, and then A, B, C for the Y, right? This will give us the C leg of the neutral triangle, which is the larger neutral triangle here. A, B, corrective leg C wave, because the C wave in the neutral can't be 5 waves. So if we get a bigger pullback here down to about 11,150 and then a push up, we'll take this as not being a 335 flat correction. We'll take it as being a C leg of a neutral triangle. Now I can already foresee that there would be some people that would count this as the fifth leg, if it happens this way, as the fifth leg being some sort of ending diagonal. Either way, the end result should be the same, where this is a 1, this is a 2, this is 3, 4, and then they'd count this as all of this is 1, this is 2, this is 3, this is 4, and this is 5, right? Ending diagonal fifth wave. Either way, whether you want to count this as W, X, A, B, C, Y, or whether you want to count this as 1, 2, 3, 4, 5, both ways end up the same and give us the same sort of pattern, which is either the 3, 3, 5 flat or an A, B, C neutral triangle with the D and the E coming in. Bearish in the zone here, so I'll want to look for displacement in there, and we are in an extreme order block here. We've taken liquidity or about to take liquidity here. Once we do that, we'll take liquidity here and here into this order block, and then I'll take a 3 drive pattern, no problem. I'll take a 3 drive pattern into this. If it wants to do this, I'll take a 3 drive and then we'll ride it down, right, all the way down. We want to see CPI, is the CPI or NFP lows being taken out. In the overall picture or the grand scheme of things, we were still looking for this low to be taken out in the market. If this was the accumulation and this was the failure swing, this the liquidity run, then we want to still see price take out the failure swing low in order to confirm that this is a dealing range, and then the retrace back up in here, which coincides with the zoom candle top or the real high in the market. Price comes back in here and then continues down. So we still want to see the lows being taken, especially this low being taken, for an overall bearish view in the market. So from here, what we would look for is, when this ends, we want to see price do that, take out the failure swing low, come back up into this FVG here, and this FVG was created, let's look at it, maybe H4, H1, right? So these FVGs maybe H6 or higher, right? There's a FVG in here, and basically this FVG here was created once this low was broken. This FVG becomes fair value for buying, right? If you look at it, this is the ICT 2022 mentorship model right here. What we want to see is, since this was a candle that only offered sell side liquidity, right? So sell side inefficiency, buy side imbalance. People who have longed down here need to pair their orders or sell to willing buyers above the market, and those are in here. So once this could go straight up there. I don't mind it if it does, but I want to see this low get taken out first, then a pushback up into this level here, into the zoom candle, which gives us that move, and then finally we head lower in the market like that, right? So after this 5 wave or the C wave, whatever you want to call it, is complete, this gap hopefully still stays in play, and we come back for it later on because there's even more liquidity lying above the market right now if we leave it behind. So if we start to fall down here like this, all of this would be relative equal highs. There'd be liquidity lying here. Price comes back, takes it, pairs up with people who are willing to buy above market price, where only sell side side was offered, no buy side was offered, and then we head down lower there, right? So I'll take that. So that's what we're looking for on NAS. S&P are pretty much all the same sort of story going through all of these, right? You can see S&P, in fact, is already in its fair value for selling model here. We haven't taken out this failure swing low, so I'd want to see price come and take that out and then push higher, maybe into this fair value gap here, the candle up here, so somewhere along there, and then we fall lower in the market, right? So and the same thing on US30, the three should do the same. The main thing to take out of this is we want to see price draw lower first, then come back and take the liquidity, and then continue down. Right, BTC on the weekend, I was looking for a sell a bit lower. Let's close this up. I was looking for a sell a bit lower to 16.6 before we pushed higher. But what you can see here is on BTC, we have a dealing range that was created here, right? Once we took buy side here, we took sell side here, this became the dealing range. So ideally, we want to be looking for any opportunities above the 50% mark. That would put us from here to here. Anything above, we are at the 50% mark right now. Any imbalances above us? Sure, there's the imbalance here, but this is sort of a balanced price range as well, since we took price, went up here once, down here once, pull back in here and down here, so it could go into there, but I'm not looking for it to go higher than more or less where it is now. But obviously this is still on the plates, and then coupled with that is a weekly void here. The opening price was down here, you can see we are at it now, and then the closing price was up here. So if this wants to go and get filled, then 17,788.39 would be about the maximum I'd be looking for price to go before falling. Down to a lower time frame on BTC, let's take a look. Right, so I think it was around this point here that I was looking for. We had imbalance in here, price dropped down here. I was looking for price to do that before it did that. But you can see the order flow is clearly bullish here. If price retraces, when NAS retraces, then this, I'd look for something in here. This becomes fair value for buying on a 15-minute. It's an FEG in here that broke a high. So we'd look for price to dip into this for orders and then push up one more time, just like NAS and the rest do. But we are in a balanced price range now. You can see that once this starts to give us a break in structure, which it hasn't yet, we've got almost like what looks like a 3-drive pattern into the highs here, but there's nothing to indicate that this wants to head lower right now, apart from the rejections of the BPR, right? Now, if you remember correctly, you remember what I said previously is when price starts to trade below, and this is the FEG 2022 ICT model. When price trades below FE candlesticks that rebalanced previous price. So if this down candle here was rebalancing this candle in here, this would be the FEG created in here, right? That's the FEG. Once price starts to trade below it, that's a break of structure in terms of that. And what we'd be looking for is any candlesticks that go through, once they return into a fair value gap created, we want to sell them off. If it doesn't do that, then these candles or these FEGs that are being created become fair value for buying in a bullish order flow and fair value for selling. So this was the FEG that was created. I should have seen this on the weekend. Price just kept dipping into the FEG and then took off. Your only possible entry would have been in here, right? If you go down to a lower time frame, I think we can try and go down to a lower time frame here. you have, let's go M15, we get a clearer picture. Not even so clear here. M30 here, right? M30 to H1 should give you clear FEGs. So this was the FEG here that led to the expansion of price. And by breaking this previous high here, we left behind, so breaking the previous high here, we left behind another candle with imbalance and an FEG. So this is why I want to see if price wants to come down, it comes down into this FEG and then continues higher. Not many FEGs all the way up here on the M30. Price has been efficient until about here. So we'll look to see where this wants to go, but ideally if the overall is bearish and we are in the premium end of the range right now, with this being the range, sorry, this from the top there to the bottom being the range and this being the retracement, we are going to look for displacement occurring in here, which ideally gives us an FEG to sell. So we don't have to sell early market structure shift. All we need to do is let's see if we can find something here, like here, right? Once we get the first move up or down, price will come back into an FEG, which you can see in here, which is called a low risk buy, right? For the short entries, it would be a low risk sell. You then get a further pop up. This becomes your in the bullish order flow. This FEG becomes accumulation. So price is accumulation because they want to send price higher. So this FEG will become an FEG we want to buy. And secondly, we had another FEG down here. You can see price came back and then shot up, and then another FEG here. Price came back and then shot up. So we'll do the reverse for BTC once we start to see any sort of displacement. We'll look for any FEGs being created in here. So say it happened somewhere here, for example. Once price breaks through these lows here and leaves us with an FEG in here, when price comes back into it like that, this FEG becomes fair value for selling. We'd want to see price then come back down here, but be cautious here. Once it comes into here, this FEG in itself is fair value for buying. So we wouldn't be overtly bearish. We'd look for previous FEGs that broke lows. We'd look for it to come into there like that. This would be fair value for selling, and ultimately we want to break these FEGs. Once these FEGs get broken, then they will act as resistance instead of support. So it becomes an inversion level when your balanced price ranges or these FEGs start to act as resistance instead of support. So they will support on the top side, they'll become resistance once we underneath, and then we'll sell them again and look for price to head down lower. So that's all we are looking for on BTC. You'll follow the same thing for any other of the cryptos that you are looking for. If you have anyone you want me to look into in particular, you can paste it here now. I'll have a look at it. But I think this was just a quick recap or video to recap what we need to be looking for this week. Any questions you guys can ask me now or post it in the chat. Right, again, in NAS, this would be the FEG I'd be looking for. And there is an order block below it. So let's check this again. 1, 2, 3, 4, 5. If we start to break this FEG here, and especially break this low here, then I'm starting to think market structure shift. Price comes back into another FEG in here. I'm going to sell it down to at least here. That is 144. That's about $100 move. If we start to hold this FEG, then I'm thinking this needs to go higher up here before falling down. So the FEGs become very important. In bullish order flow, these FEGs are fair value for buying. So as price dips into it, you want to be buying. Only once they close below it what is it? It's our market structure shift, and the FVGs will become fair value for selling once they turn support to resistance. Any of the alts you guys want to look at? Let me know now. Let's have a look at LTC. You can see the fair value for selling order block is just above us, so this could go into here and then sell off. So that's what we're looking for in LTC. Again, a low was broken, it left an FVG, sell side inefficiency, buy side imbalance. Whoever longed down here, they're looking to sell to someone and ideally up in here, and then we take price lower after that. That's all that it is. Any other questions? If not, then we'll go back to the Discord. You guys can ask me anything there. And on Wednesday, I'm back at work, full force with crypto. I haven't been looking at crypto mainly because of all of this shit here that happened in December. Okay, give me 1 second. All of this sideways shit just put me off. But we're starting to get to interesting bits now. If NAS is looking a bit bearish, so wait for something in here to give us a low risk sell. I haven't checked any of the VWAPs or anything else, but on a 30-minute, I think we'll leave that to Ace Trader to give us some levels in here. What is this anchored to? Just give me a second. Anchored to the session. Let's go for a week. Right, so I can see previous weekly band here. You can see it here. And then we have this one here, the upper band of the weekly, all the way up here. So if it starts to reject around here, we'd look for price to pull back into this and then possible move up here. That would cap BTC for us. Again, it's if we take away all of the fancy things here, what do we have? We have accumulation, failure swing, the OLR. Once we break this low here, then I think it's all over for BTC. That's the move or the expectancy on BTC to head much lower than that. Right, new lows on BTC. We still have these relative equal lows created here in November, so that won't stay in the market or shouldn't stay in the market, and those should come out. So once we get some decent displacement here, we won't look at trying to find a top. We'll look at basically, if I can show it to you, would be something like this. Just give me a second. So I'm going to invert the chart so it looks as if we're looking for sells, right? Yeah. So picture this being the top of BTC here. We have an FVG here, breaking through previous lows that rebalanced FVGs inside here. Market structure shift. When price comes back into the FVGs here, that's where we're looking for sells. This becomes low risk sell. Even though the stop's pretty far away, you want to be looking for sells in here. And then the second legs would then be, once you start to break down again below the lows, you left with FVGs like this. When price comes back into it, these become your first leg of distribution, right? First leg of distribution. price breaks lower, now the FEG created here, second leg. So that's all we'll be looking for on BTC. We don't have to catch the actual top. We'll actually get better lower risk entries on low risk sell, first leg of distribution, second leg, and take it down. So there's no there's no hurry for me to catch an absolute top on BTC, because the low risk sell, if this was a top, should offer us exactly what it is, a low risk sell, and once price starts to move, our stop should be then safe above here as price starts to move from buy side of the curve to sell side of the curve. Right, so we'll wait for displacement and all of the other good bits. Okay, that's it. You can ask me any other thing inside the Discord, and I'll give you guys any answers that you want.
Cool, thank you.
Thanks, cheers.